All right, good evening, everybody. This time it's for real. How's the sound? See a bunch of people logged in the last couple of minutes here. Good to go? All right, welcome, everybody. You should have a slide up there that says a moment in time. Some of you may wonder what that means. Some of you that have followed me for a while, or if you're a subscriber to the room or the letter, you probably know what that means to some extent, because the term I use a lot is kind of more of a style, if you will. I've had a hard time defining it always, and I think maybe I learned something in communication in trying to prepare for tonight, because I had a hard time wrestling around exactly what I mean. I know what I mean, but to communicate it, I've had a hard time wrestling around with this. Tonight's going to be, I think you're going to enjoy it. It's going to be a little different than I sometimes do. It's going to be a little bit, I have fewer slides, less information, a little slower pace, a little more. I want you to understand, what I'm talking about, not just fly by and get the general concept so much. For some of you, I think a good number of you are really going to enjoy this. You're going to be on the edge of your seats kind of saying, yeah, I always kind of thought that, or gee, that really, makes sense to me, rings a bell. Light bulb goes off. For some people, it may be just kind of a mystery, and part of that problem may be simply that I'm not, teaching technical analysis per se. You have to have a foundation of what to do to really fully understand what I'm saying. But I think it goes a long ways to help people, whatever level you're at, to understand what's out there to be able to do, to understand. And if you've had some education, I think these things are very helpful to you. As I said, I had kind of a hard time wrapping my head around exactly how to explain this. And it came a little clearer to me as I actually forced myself to explain it. But this is something that happens a lot. I've noticed that, and maybe you've noticed this too if you've ever had to teach anything, that you can kind of acquire a skill and know how to do it, but yet you really can't put it into words. You just do it. I mean, you could equate that to anything, I guess. Like if you're a good golfer, maybe you have a great golf swing, but you couldn't teach your friend how to golf if your life depended on it, because you just do it. You don't know how to say it, right? And it's kind of the same thing in anything that you learn and that you teach. It's the same thing for me teaching charts. I remember going back a long ways where I really understood gaps, trading gaps in the morning and how they worked and what you need to see, but I couldn't really explain it to somebody. It took me a long time to really, formulate the words and the concepts to put it into a reasonable concept, and then to get it down to a pinpoint system. Does that make sense what I'm saying, everybody? It takes a long time to get something, even if you know how to do it well, it takes a long time to be able to communicate and teach it properly to somebody else. Yeah, and it was the same thing with this, and I've encountered that anytime I have a new concept, and this is kind of one of those. I kind of trade by this concept. And again, it's not a lesson about how charts work. It's a lesson about what you do with the information once you know how charts work. Because some of the main themes that I talk about in these sessions are the fact that I know many people get to understand charts to some extent, yet they never make a living at this, and yet you should be able to. And these are the problems that I think are of the greatest urgency to help people with. Everyone has to understand, I think, that if you want to make a living in the market, you have to understand charts. I'm going to get to that in a second. And you need a good education in that. I'm not going to harp on that. If you try and do without it, you will fail. But I'm talking to people who have, are making that effort to learn, and they still hit pitfalls, and that's what a lot of this is about. So let's start here and get underway. We're going to very simple concept tonight: introduction, definition of what it is, and some examples, and I'll get to it as we get there. As I guess I can read this because I said it right there. As I set out to define what this style is, if it is even a style, I found it may be useful to review some concepts I have lectured about over the last 15 months. As I began to focus on this, I figured that if you have not really listened attentively to the last, attentively to the last 15 months that I've been posting these things, you may have a difficult time understanding tonight. So I want to just review some concepts you need to know. And I've been doing DTS for about 15 months now, and there's quite an accumulation of things on the free stuff page. Not only the videos of these recordings, but a lot of other things, and I'll cover that in a minute. But some of the highlights of some of the things I've talked about, almost all those are the things I'm about to show you here. Almost all of them have been the subject of a prior session or recording. Trading and investing is not about, this is the not column. This is the dum-dum column. And I'm sorry I don't mince my words much anymore these days. I used to have 2 years ago, but not anymore. It's not about fundamental analysis and news. It is about technical analysis. Now, I always make a point of trying to have these discussions with people. When I do the Friday afternoon Introduction to Mastering Technical Analysis class, which will be coming up actually pretty soon. It's going to be, a week from Friday, right? It's something you all get an invite to if you haven't been to it. It's the actual first part of the seminar program that I teach to people who pay for it, but I invite everybody to that class. I talk on that day somewhat about the concept of how using fundamental analysis is not only not needed, it's actually very detrimental, and also news. Now, on the news thing, because I continuously keep coming up with examples to show people, I finally decided this weekend to take some time and to put together a great synopsis about how useless news is. Again, not how you just don't need it, but how it actually hurts you to follow it. And I sent around an article to all of you. Should have received it, unless you're just a new member this last few days. You all should have received it. And if you just deleted it or said it looks stupid, here I actually archived it on the site, and it's on the free stuff page. And you can get it right there also if you want to. I think it's a fantastic article. What I'd like to do sometimes in some of these discussions is to not just give you my opinion of one side, because to me it's not my opinion. I have been, whatever you think of me, I think there are a few people in the country who have looked at charts as much as I have at this point. For 20 years, I have lived and breathed charts every day. Now, there's some other people who have been just like running companies and stuff, but not really looking at charts. But I've been looking at charts every day for 20 years, including, today and yesterday and last week and last month. That doesn't stop for me. And there are a lot of things that there simply is no discussion about for me. And I wish I could just pick out part of my brain and hand it to you to convince you. But things like about fundamentals and news, what I like to do, since I know some of you are not in a position to fully understand it, I like to present an argument so complete, so thorough that there is no counter argument to it. And I think that's what that article does. And the same thing with fundamentals when I talk about it. When I'm done discussing fundamentals, you just cannot present something to me that says you should be looking at them. There is no argument that says you should. If it helps you at all, technical analysis and charts, it's not a contradiction to fundamentals or to news at all. It's not at all that. What it is that technical analysis absorbs all of that stuff and puts it into the final analysis to say, here's the final outcome of all of that crap that you're looking at. Here's the final outcome. Why go through the process of trying to figure all this out when the outcome is right here? Look at the outcome, look at the pattern, look at the battle between the bulls and the bears on various time frames, and you can see how it works. And it gives you very good odds, better than anything you will ever pick up anywhere, anytime. So it is about technical analysis. But even if it's about technical analysis, a lot of people think it's all about finding perfect patterns. Now, I did the better part of a presentation on this, and I forgot what it's called right now, but you have to look through them all, but it's a fairly recent one from the last 3-4 months. And I talk about the fact that even though theoretically, finding perfect patterns, that's like everybody's goal, right, in technical analysis. That's what we're all trying to do, find those perfect patterns. But I think that's a fallacy, as I explained. I just want to take a minute to summarize that, because number one, what is a perfect pattern? I mean, that is subjective to some extent. Do you not think that there could be 2 or 3 excellent, outstanding traders out there that could look at a chart and disagree on whether or not it's a good or perfect pattern? Absolutely. A lot of this is subjective to some degree. Not to the 100th degree, but to some degree that last little part is subjective. And even if we could agree on what is perfect, what do you do when you can't find your perfect pattern? You're a day trader, you just don't trade for 3 days? So finding a perfect pattern is a great cliche and a nice thing to say, but I think that our job as traders and investors, I use the term traders, but as a trader you may hold a long-term investment for months or years, that's fine. But our job as traders is to learn to deal with what we're presented with every day, every week, every hour, depending upon what you're trading. Does that make sense, everyone? By the way, if you're listening and you have a question, please throw it out. I want to entertain questions as we go. I want this to be a free and open debate. And also, if you get one of those light bulb moments and you want to put an LB out there, I love that as well. So I think the bottom line is that what trading investing is about is just a great overall technical understanding. A great overall technical understanding so that you can kind of like just take what's presented to you and decide if you can make something out of it or not. I'm not saying that we try to find sloppy patterns. We try to find the best patterns that we can, but we have to deal with what we have every day. And we have to also make the decision during the day, is that good enough? Is it perfect? Well, you're never going to find perfection. Trading investing is not about, and this one some of you are going to shake your head at, but this is something I more and more have harped on teaching recently that I've believed for a long time. Well, I really started harping on this going back when I started DTS 15 months ago, but it's not so, I mean, obviously great patterns with okay entries is okay, but I would prefer an okay pattern with a great entry. I'm going to show you why when I get to some examples. And I know that may not make a whole lot of sense to you. But okay patterns with great entries are better than great patterns with okay entries. Now that's all semantics and it's all just soft language, but I'll show you what I mean by that. And most people do it the other way around, and it's something that causes, I think, a lot of problems. So great patterns, okay entries. Am I going slow enough for everybody? Everybody getting the gist here? Everybody doing okay? Trading investing is not about 100% certainty or guaranteed positions. It's about math and probabilities. However, I wanted to point out, whenever you say probability, some people curl up in a little ball and want to shrivel away because they have this terrible vision of some college class on statistics or something. I'm talking about 5th grade level math and probabilities. That's pretty much what I'm talking about. And I know sometimes I'll pull some stuff out that's higher level than that, but to effectively trade, once you understand it, that's all we need to understand. But there is a lot of this in trading. Whether you know it or not, or whether you believe it or not, every decision you make when you go to take a trade involves a trade-off of probabilities. It always, does anybody know, I want a sip of water, does anybody, whenever you take any position, you're always balancing two things. Do you know what those two things are? What are those two things? And you can't avoid it. If you decide to use a 2-minute chart instead of a 5-minute chart, if you decide to take a swing trade, intraday or not, if you decide to give the stop a little more room upon entry, you're always balancing two things. Well, I don't like the term risk per se because risk, you have to define what you mean by risk for me. But specifically, you're always balancing the chance of success versus what you can make. So reward's a good word. And if risk means to you the chance of success, then fine. A lot of people take risk to mean the money you're risking, which is what I take it to mean. But the chance of success, i.e. not stopping out, versus how much money you make. It's always a balancing act that you're doing. And it's something when you understand it and embrace it can help you tremendously rather than something that you're always fighting. By the way, as we go on, and when we get to charts in a minute, if you want to expand the slide up top, there is a little button that you can take and it will fill your whole monitor just like you're on a YouTube video or something. You may not want to do it now, but when we get to the charts, there's a lot of detail in some of these charts you may want to expand, and it's right up top there. Trading investing is not about reading opinions of the markets or the economy. Whose opinion do you think I care about in the world? Nobody's. And you shouldn't either, because there's nobody out there. I mean, other than getting, being taught how to do this great, but I mean, I'm talking about just listening to the news and having people telling you, oh, gee, President Trump said this and that's going to kill the stock market, and oh, gee, China said this and there goes our economy, and all that stuff is just crap. And you need to stop listening to it and trying to make decisions based on it. And again, that article I just posted for you just above there, about 10 lines up, discusses that very thoroughly. What is trading about? Some of you are not going to like this. It's about playing a video game. Now, if this was my first month trading and I told you trading is about like playing a video game, some of you may tune out right now. But I've been around a long time, and I have to tell you there's no greater analogy to me than playing a video game. Do some of you agree with that? And I don't mean to lighten what we're doing. You're making your living. We're talking about serious money. But I'm talking about the fact that you are looking at a screen and all the information that you need is in front of you. Gordon, everything you need is in front of you. In other words, I think the best trader in the world would be somebody, which is I try and emulate, who was on a deserted island, whose cable connection only was able to hook them into their broker. It was a one-way connection that went to the broker and nothing else. And it's all you had. After close, before open, you had nothing but your charts. And that's all there was. And all the information in the world to make your decision was right there, because that is what you should do. In other words, just like when you're playing a video game, you don't get on your phone and ask somebody an opinion of something. You don't go look something up. Well, I guess you could if you cheat. But I mean, the game you're playing, whatever it is right there. Everything you need is there. And everything you need to make money in the market is in front of you, and that is what it is like. It is like a video game. It's how you should interpret it. It really is what it is. And I know that there is a tremendous, I'm good at hitting buttons because I've been through this myself, over the years. And I know there's a tremendous desire to want to, earn your living, right? Like, gee, I don't feel good. I know it sounds stupid, but give me a one if some of you relate to this. I just made $600 this morning in 90 minutes, but I don't feel good about it. I can't quit, you know what I mean? You know what I'm saying? It's like I need to work for that. And we all have this work ethic. Most of you got here because you're successful at whatever you did. Great salesman, had your own company, ran a business, whatever it is. And you come here and you go, well, I have to work for this. I have to go study book-to-bill ratios, and I have to understand the company that bought it or the company, what are the conditions and what are the terms and blah, blah, blah. And it's all useless crap. I know you have to get used to the fact that what you do is you come in, you grab your money, and you say goodbye. And you say, that's it. Whatever time frame you're on, it doesn't matter. And you don't feel guilty about it. You don't feel bad about it. You earn your money by understanding where prices are going, not by understanding all the underlying information that determines where prices are going, because you don't know how to interpret that. Nobody does. The best economist in the world is clueless what's going on. That's a fact. It's an absolute fact. Look at how things are different. People tell me about things, that were true 20 years ago. Guys, the world economy is a totally different place. I mean, everything is different. Do you know, some of you that go back a few years and study the economy, whatever, can you imagine 20 years ago? What would people say if we just printed money for 8-9 years? What would people have said about that? Because I remember my dad was a big study of the markets and all this stuff, and he would have just pulled what was left of his hair out. He would go crazy about printing money. But yet, does anybody know what quantitative easing is? For 8 years, you heard that we're under a quantitative easing. You know what quantitative easing is? Anybody know what it is? Oh, sure. We always print money. Yeah, quantitative easing is just a new term for printing money because we don't want to say print money. That's all it is. So we've been printing money in record amounts. And by anybody's definition from 20 years ago, we should be in skyrocketing, catastrophic inflation. And I know some of you now who study this, you're going to tell me the reasons we're not. But again, it's all after the fact analysis. If you would have just, done your normal stuff and said, boy, we're going to be out of control inflation, it's never happened. It may never happen. We just don't know. Things are different. So we want to see the end result of what all this does, and it shows up on a chart. Is it foolproof? No, it's not foolproof. It's this. It's about probabilities. It is far better than anything else that you will ever look at or do. And finally, the last one, this is the introduction, by the way. It's not about forcing concepts you don't understand. It's about playing inside your zone of comfort, i.e. confidence. I put this in here as an important one because there are approximately 1.3 million ways to make money in the market. And that number is exactly correct. I didn't just make it up. There are 1.3 million ways to make money in the market. And you know what? You can pick any one you want. And I'm not trying to make light of it or say that it's easy. I'm just saying that there is no one secret formula. And if you try to incorporate something that fights everything in your body, will you be successful with it? If you study something and it just fights your very being, you're never going to. Let me ask you this. Let me ask some of you this, for those of you that are trading, investing right now to some degree. Have you ever had an idea for a position? You got in the position went to its eventual target, you felt like a genius, but you weren't in it. because you couldn't live through the process. You didn't have the confidence to know it was going there, and it shook you out one day. It scared you one day. You took profits one day because you thought, well, I'll take some profits. It's better than losing money, right? Well, this is part of the whole process, and that's why I think I listed on the slide as one of, to me, the more important things, is that you have to be able to look at that chart and say, you know what? That's what I'm doing. And there's where I'm going to take some money, and I'm not going to take any more until there, and I have confidence I'll get there. Now, it doesn't always get there, but if you don't have that confidence, well, many of you know what it's like. You're just a sheet in the wind, and you're just kind of made a little money here, lost a little money there, and at the end of the month, you're just losing commissions, and you're thinking, well, I'll do better next month, but you don't. So you have to get beyond that level if you want to continue to improve. So, if there aren't any questions, let's go on to the next slide, which is called definition. Definition of moment in time. That's what I'm trying to hit here. I don't have a single phrase for you. I have 3 phrases, and if you put these together, maybe it will be something interesting. Maybe not. The confluence of relevant multiple time frames. Now, you like that word confluence? I threw that in there because I felt like it was the right word to use. I also get a kick out of it because it's like it's the in vogue word, you know. If you're a politician, no, confluence means the joining of similar things. I had to look it up a long time ago because did you notice all of a sudden politicians all started using this last year? Did you notice that, anybody? Seriously, I mean, you can't turn on the TV and they're not talking about the confluence of effects. What? What the hell is that word? You mean influence? What are you trying to say? But yeah, you know when this word was used the most? A little side divergence. This word was most popular. Anybody know when this is most popular? As much as it made a surge this last year, it was most popular in the 1800s. This is a word from the 1800s that made a recovery. I don't know why I brought that up. A fun fact to break the tension here for a minute. So, confluence of relevant time frame. In other words, it means the coming together of multiple time frames. There is nothing, what does this next line say? Nothing is more important when you're understanding technical analysis. That to understand that there are a group of people that may be taking and buying a 5-minute chart higher, but all of a sudden they meet a bigger group of people who are waiting to sell on this hourly chart. When it gets to a certain area, then bam, you get killed. But then that hourly chart drops for 2 days, and all of a sudden, guess what's happened? The biggest money of all comes in on the daily chart and takes it higher for 3 days. I mean, this is the normal ebb and flow of money, and understanding the battle as it occurs on each of the time frames is important. Every time frame? No. There's always a time frame that you're interested in. That's the time frame you're playing, the time frame reference. And then we care about 2 time frames above and 1 time frame below. And I'll show you this in a minute. The time frame above is very important. The time frame 2 above, I was like to say, must not conflict at the very least. And the time frame below often gives us great additional information, confidence, or affirms the pattern that we think that we have, or provides for a great entry. So the first thing about a moment in time is having this perfect combination of time frames where it is. I mean, do you know that theoretically, does this make sense to you? This may be a good way to explain it. I didn't think of it till right now. It just popped in my head. Do you know that theoretically that a chart that was falling on the weekly chart and turned around and went into a weekly rally for multiple months, do you realize that there's probably a 1-minute breakout or 1-minute pattern failure that actually is the very root of that weekly trend that's been going on for a month? Do you realize that? That you could trace it back and say, here is the time, here the weekly chart started an uptrend here, it started when this daily chart did this here, and the daily chart turned around when the hourly chart did here, and that hourly chart broke out right here, and here is the 1-minute sell setup failure that began this whole move. Do you realize that you can do that? In hindsight, of course I'm talking, in hindsight. Does that make sense? That you can actually trace back your ancestors. You can trace back the root of any move to one particular moment in time. The point is that in a sense, that is the ultimate definition of a moment in time. That is the moment in time. I'm not going to do it right now, but that is there's nothing to do. I mean, anybody can do it. But I'm just saying that when you see that in real time, that is what a moment in time is. It is to say, here is this 1-minute chart could actually be the entry point for a 3-day move. Now, that's not what we try and do normally. We don't try and do it. It's impossible to do. You can't do that normally. But nevertheless, there are moments where that happens. And I'm taking it to the extreme, talking about a 1-minute chart triggering a weekly chart. But theoretically, that's what can happen. And that's what this is kind of revolving around. Here's the second part of my definition for a moment in time. You don't have to know where prices are going to make money. What do you think of that comment? You don't have to know where prices are going to make money. You don't have to know where prices are going. Insane? The talk of idiots? Something to put on the screen because you don't know what you're doing? Good excuse because you can't make money? Well, this is something that and again, I imagine I got it from him, but in my mind, I've always said this. So I'll give him credit, but if you agree with this, you would be on pretty good company. This is Mark Douglas. His exact quote is, and I just Googled this to make sure I had it, you don't need to know what's going to happen in order to make money. Mark Douglas is quite a famous trader who has authored a couple of great books. If you want to read about psychology and trying to overcome some of the issues, I would recommend the Douglas books. There's 2 of them. Maybe somebody could type the titles. I don't remember them. They're behind me somewhere, right? Well, Carmen, it's not the point. It's not. You can. I mean, I do it all the time. But the point, very simply, is that there becomes a moment. I call it a launching pad sometimes, and I'll show you some examples on charts in a minute where you don't know that you're about to drop. But if we're going to end up going lower, this is what's going to start it right here. That's kind of the wording I use sometimes. And it's a matter of finding that perfect confluence of time frames where if this happens, this is going to happen, snowball effect, boom, 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 this is it. Rather than having the time frames fight each other. In other words, moves happen all the time. I mean, a chart, and this is what confuses a lot of people, is that you look at a chart and something just drops all of a sudden. And I'll get this question, well, how could I have captured that? What is, trading the zone, discipline trader, thanks. What trading the zone is the premier one that that I think you should read. But what do I'll have that asked to me sometimes. Somebody will send me a chart. As a matter of fact, somebody that's here right now did this to me. They sent me a chart and said, wow, look at this drop. How do I capture that? What's the answer to that? You look at a chart that drops and you look and, wow, look at that drop. How do you capture that move? How do you capture a move that you find after the fact? You say, boy, I wish I could have had that move. It just dropped out of nowhere. Just going along, it's in an uptrend, and bam, it just dropped. How do I capture that? How do you do that? That's a real question to you guys. How do you do it? Yeah, you don't. You don't do it. The most important thing I can tell you is, and I've said this in other events, is that is not our job. Let me give you how I discovered this. This is my first year of trading. I lived somewhere else, and I had a neighbor, and we used to run every morning. He'd knock on my door at 6 o'clock in the morning, we'd go running. And he'd know nothing about the market at all. He had mutual funds. It was almost totally filled with stock from a company he worked at Allstate. And he didn't even really know what I did. He just knew I was involved in the stock market, knew what I was doing, blah, blah, blah. So he asked me, and he said, hey, do me a favor, would you? He goes, I just was sitting down with this financial counselor, and he said, my whole IRA is Allstate. It's like the whole thing is Allstate. And he said, it's not a good idea. So he said, would you take a look at Allstate and tell me if you think I should sell some, sell all, what do I do with Allstate? So I said, sure, I'll look at it tonight. So I pulled up Allstate on my charts, and it's in his IRA, so we're not talking about intraday. We're talking about daily, weekly, monthly charts. I looked at the daily, weekly, monthly chart. I looked at him. I said, And keep in mind, I was in my first year, and I was actually doing well, and I was very confident. I felt good about this stuff, but this is a long time ago. And I looked at another chart, and I said, And then I looked at charts, and I expanded them, and then I looked at a yearly chart, and I looked at another daily chart, and I looked at the sector for insurance, and I scratched my head, and then I turned my monitor upside down and looked at it that way, and then I stood on my head and I looked at it that way. And what was my problem? A terrible sinking feeling came over me. I was very confident what I was doing at that point. I was doing well. What was the terrible sinking feeling that came over me? And this was a revelation to me at the time. I mean, now it's just common sense, and this is why I relay some of this stuff to you, because I know some of you probably, are wondering this stuff myself. Right. I had no idea what Allstate was going to do. I didn't know if I should tell them to hold it, get rid of it, sell it, buy it. I didn't know. It was just meandering all over the place. Right. Nothing there. And that really bothered me. It took me a while to resolve that. Because this is before I was even, doing a room or teaching or anything else. I was just on my own. And it bothered me for a while. And I don't think I resolved it for a few months. And then I came to realize one of the greatest things that there is about trading and investing is that our job is not what a lot of people think. It is not to look at a chart. And by the way, I have a lot of charts coming up here if you're getting bored with me talking. Our job is not to look at any chart that you throw in my face and say what's going to happen to it. Because the answer should be, I don't know. What percentage of the time do you think the answer should be, I don't know? If you look at 100 daily charts, how many of those 100 should you say, just statistically, this is a real statistic, how many of those 100 should you say, I have no idea? Yeah, well, not 100 or we'd be out of business, but I mean, 90 out of 100, you should pretty much say, I have no idea. And 97 out of 100 don't make the cut to say, I want to look at tomorrow. In other words, when I look at my charts, I look at 1,000 daily charts and I save a dozen, 15, maybe 20 on a good day. And those are just the ones that I have some remote interest in. The odds are that maybe one of those will become a play for me every other day. That's it. And when you think about it that way, it changes what we do quite a bit. Because we don't have to figure out everything that's going on a chart. We need to memorize the patterns that we know, love, and understand and wait for stocks to fall into those patterns. Does that make sense, everybody? Because if anybody didn't get that 100%, I want to repeat it because it's one of the most important things I can teach you. Now, naturally, you have to know, does that make sense? Seriously, yes, no? Are you lost? Repeat it. Perfectly good. Now, naturally, you have to know what those patterns are. That's what learning and understanding technical analysis is. But this concept that, oh, the stock just had this big move, and how do I catch it? You don't. Not unless that stock happened to fall into some pattern, because 95% of the moves are just random events. And again, in another presentation, I discussed the fact, I asked you if you think the market's a random walk. And everybody says, oh, no, of course not, because you think that's what I want to hear. But I tell you, yeah, it is a random walk for the vast majority of stocks. We look for those ones where it's not a random walk, that there is a buyer, seller, group of buyers, group of sellers that are just sticking their head out and they can't hide it. They can no longer hide it. They're saying, I have to buy this stock, and it's giving those indications. That's what we look for. Better to have a great entry to a so-so play than a so-so entry to a great play. I'll go over this one on a chart in just a minute in great detail, so you don't have to worry about trying to figure that out. But it's about making money, not about being right. There is a difference. There's a big difference. So here's another way to try and answer my question. I'm trying to convince myself as well as you guys what this definition is. So in a sense, any good position you take, any good strategy is one of two things. It's one of these two things to me. And this language is new, by the way. I've never said this in this exact term before. Number one, you know that this is the general area the prices will hold, reverse, or continue due to a very strong bias on a bigger time frame. But the exact entry is unclear. You're usually correct, but due to the lack of exactness, you're not able to make as much money as entry, stop, and target are very unclear. It's ironic. It's as if there was a trading god on my side. I have perfect examples. Monday, I did 3 trades. It was an exceptionally good day, and I'll give you complete honesty because today wasn't. But I did this last night, and I used Monday's trades because there's a perfect example of every point I want to make on the 3 trades. And it's just weird how it worked out. It's as if I picked 3 charts just to do this presentation, and I had no idea that was happening. And the second way is this. You find a precise entry that is a key or focal area. You're not sure if prices will move, but if they do, this exact place is the launch pad. You may be wrong, but when right, the payoff is big as you are at ground zero. It pays for a few failures. Does this make sense, guys? At least as much as it can? Does it make sense? Okay. Now, obviously, there's a lot of science to this. I'm giving you some vague wording, but whichever one of these you do, there is specific context, specific entry that you have to use to make this work properly. And I want to just throw it out there because sometimes people ask me why are you giving us all this information, so to speak? Well, again, I know a lot of you are doing another job. You're not ready to start this full time. You're not ready to spend any money to do this. And I'm just seriously trying to help as much as I can in the meantime. But I fail to mention sometimes the fact that when you want to do this, you do need to take a full seminar program because the detail would blow you away. I mean, if you think I'm teaching you something now, I'm not teaching anything. I'm just giving the peripherals about how to better use technical analysis. People are blown away when they go through the class because the detail and the way it's made into a science is incredible, as much as it can be. It's going to always be somewhat subjective, but most people are everybody is blown away by how much there is to actually learn about what there is. This isn't just guesswork. So it's one of these two things that you're always doing, okay? Boom or boom. I was supposed to highlight those as I went through them. Right, so I want to now show you an example of a perfect example of a great pattern with a moment in time entry. I want to show you an example of a so-so pattern with a moment in, I forgot what they are. We'll go through them in a minute. But one of these is based on great technical understanding. The other one is based on a moment in time. Keep in mind, the moment in time is really great technical understanding plus something else. I don't mean to say that you don't need great technical understanding for a moment in time. You need to have that great technical understanding, but because you have that great confluence of everything coming together, you don't necessarily have to be exactly precise on if you have the exact moment or the exact direction. Examples. So this is Monday, and I did 3 trades, done trading by 10:30. Obviously, it was a nice day, and this is a really nice day. And again, I'm not here trying to show off a day. I did this last night. I used these 3 trades. Today, I gave this back. I had a tough day today. It was as bad a day as I've had only once in the last 4 months. So I gave this back basically, or not all of it, but most of it today. I'll come back, and I'm not even mad about it today. There were just some things that simply, had some weird moves today, and I maybe overplayed or underplayed the waiting for the FOMC minutes today. I don't know what happened, but so I'm just being fair and honest here today. Yeah, it happens once in a while, but I mean, those are people that follow me in the room. They see these results every single day. There's nothing to hide. I do well. And I just don't want to throw this out like some people don't say, oh, look at this great day. I had a tough day today. I'll be there for the week, and but it was. So I want to look at these three trades. The first one I want to look at is HLT. Now, it was the second trade of the day, but I want to do it because it was the perfect trade in terms of both technical pattern and moment in time. Now, the best I can do is show you these examples and hope that it makes some sense. Again, the underlying strategy is something I talk about for hours. My classes spend about 24 hours talking about all the underlying components about this. So, I say that because one of the things I get for these seminars or these webinars I do like right now is somebody will send me a trade in 2 days and say, Paul, that trade you showed us in that webinar the other day, and when I did it, it didn't work. What did I do wrong, right? And I look at what they did, and I'm like, what in the world is this? This isn't what I did. It's not even close. You're not even in the ballpark. Because there's a lot that goes into this chart you're looking at. This chart is the result of looking at 13 or 1400 charts, and this is one of a half dozen charts I like that morning. So it's special. It's not just anything that you find. So this is HLT, and I'm showing you what it looked like Monday before open, except for the daily chart. Now, the next 3 charts I'm going to look at are all the same setup. So get to know daily chart here, 60-minute here, 15-minute here, 5-minute here. I think it's better to show it to you this way. I started doing this for the seminar students for our practical application review days. I'm putting these on one chart to review and capturing them, and because it's a lot faster, more efficient. So there's the charts. The daily chart, this is how it looked after the trading day. So this is at Monday after. I didn't blank out the daily chart because there was nothing really special about the daily. I'll get to it. So the 60-minute chart, this is what it looked like when I scanned. And this is what the 15 looked like when I scanned before I took the trade. So this is Monday morning at open. Everybody follow? This is what the 60-minute chart looked like after the trading day, and this is what the 15-minute chart looked like after the trading day. This strategy was based on the 60 or 15-minute chart. Sometimes the strategy is kind of interchangeable between those two, but that's where the strategy resided. The daily chart is here to show that it did not conflict with the trade, and in this case, it not only did not conflict, but it actually was a positive to the trade because of this gap up and hold. See this green bar here? That's this gap up, rally, and hold like a rock. That again is the chart telling you, without question, that there are buyers for this thing, and they're there, and they can't hide it, and they're trying to hide it, and they can't. This is one of the things we look for. So to me, this was just, it was the number one thing I was looking at this morning. So the play, of course, would be theoretically for most of you to take it when you break across this break and call it a 15-minute breakout play and put your stop down here. I'll talk about that in a minute. It's not what I did though. Here's the 5-minute chart. So, and again, the 5-minute chart at open, and then after the day was underway. So the stock opened inside the base, fell, and then rallied. So I took my entry right here. I put it, it's 69.25, stop under 68.80, 45-cent stop. I took it right there, and that was, I don't know what the low of that tail is, but it's 10 or 15 cents away. Now, this is what I call, go back to what I was talking about, this is what I call as close as I would call to a perfect setup in general. Technically sound, beautiful pattern. You guys may not agree with that. It depends on what you learn, what you've traded. By the way, reinforcing that a little bit, I don't mean that sarcastic, I mean that seriously. And it goes to the fact that, we all have what we like, and there's a million different ways to make money in the market. Let me remind you of another book that's out there. It's called New Market Wizards. Any of you heard of New Market Wizards? It's an old book by now, of course. I guess it's one of the classics. I don't know. It's by Jack Schwager. Have you heard of that? Okay. My interpretation, again, I read it a long time ago, haven't reread it. It's not any great book about technical analysis. It's not going to teach you a lot about that, but to me, it had two incredibly valuable lessons. Schwager is not a trader. He was I think some kind of behavioral psychologist, and his goal was, and forgive me if I don't have every nuance right here, but the bottom line was his goal was to go out and get 25 successful traders, interview them, and find out what they did in common. In other words, strip through, forget learning technical analysis. Just find out what these guys did, what they had in common, and surely the thing they had in common would be the thread that holds everything together, and that's how you make money, right? Well, there are two huge points to the book, and one of the points was the point of my discussion right now, which is, what these 25 guys had in common, technically speaking? What do they have in common? Yeah. The thing that they had in common was they had nothing in common. Yeah, I mean, I guess you could say that what they, as far as he wanted the technical concept that they did. There was nothing they did that was the same. What they did do the same was they all waited for their specific little niche to happen. I think that's what's interesting. So, again, what I do, what I teach, people, even from what I teach, even though I'm teaching, can take off in a variety of different ways, again, trying to fill your comfort zone with what you need to do. So there are a variety of ways to make money in the market. There are. So I took it down here, and this is what I call a moment in time entry. So notice where it says here, great setup and a great moment in time entry. Now, why do I call that a moment in time entry? Well, because you know what this did right here? This broke below the entire 15-minute base. How many people coming out of Technical Analysis 101 would say that that's a short right there, right? I know most of you wouldn't, of course, you understand the difference, but we just broke below an all-day consolidation in a downtrending daily stock. Isn't that a short, everybody? Maybe it was. Maybe it could have been. Maybe someday it would be, right? Yeah, but I know this pattern, and I know that the odds are great that it'll get bought as it breaks down, and the dum-dums that shorted this are going to be covering what they did. So this is what I mean by moment in time entry. I can't guarantee you that buying it under this base will work, but I do this all the time. Yeah, yeah, you're right, Ted. It broke its, thank you. You know, when I said that, Ted, I said in my mind, well, that was a little bit of a slip, but it's not uptrending, Ted. It's not uptrending, but it broke its downtrend. Yes, you're correct. It broke its downtrend. Good catch. That's an excellent catch, Ted. I appreciate that. But it wasn't really the point of the story. Anyways, the daily chart does not conflict with this play. So that's what I call a moment in time entry. Now I want to emphasize here on this chart as well. I had back on the slides. Let me go back there just for fun for a second. I had on this slide something. How did I phrase it exactly? Where'd it go? Great. I'd rather have a great entry on an okay pattern than a great pattern with an okay entry. Let me explain to you why. It goes way beyond the simple concept of, people look at charts afterwards and they just go, oh, reward to risk, made this, make that, I understand, blah, blah, blah. Follow me through on something. Let's say on this chart here, you did the traditional thing that, you were taught to do. And that was what? To buy over this base, correct? So you wait and you buy it right there when it goes above the base. You following me? Right? You buy over the base. I'll draw a straight line there. There's your quote unquote base breakout, right? And your stop, of course, would have to throw down to here. You rally, 10 cents. You're up a fifth of an R unit. You're up a few dollars. And this big red bar comes in. And you're negative. Do you see? Does everybody understand what I'm saying here? That at the low of this red bar, you're negative. Do you see that? You were up. Let's say you were up 100. Let's say you're going for $500. You're up $100, and now you're down 150. What do traders do when they don't have confidence and they were up and they go negative? What do they tend to do? Yeah, blew through the entry bar. Again, that's really irrelevant, but that's what's yeah. Well, even if they don't bail, I don't know if you guys can zoom in here close enough if you expand this whole thing. Notice that after the red bar, that green bar formed and there was a bottoming tail left behind. Right? At the very least, they raised the stop there. Right, Terry? Raised the stop to that, and then guess what happens? They got taken out. Even if they're trying to be laid back in their mind. Well, I'm not doing it. I'm not going to panic. I'll let it bounce, and then I'll put my... And guess what happens? So they get out, and they say, well, you know what? I only lost $100. It was just a partial loss. But you know what, guys? It's not that you only lost $100. What is the real loss on this? What is the loss on this trade? Yeah, it's that you missed the 2.7R move, which is half of a week's profits. Right? Now, some people say, oh, missed money is better than lost money. Well, again, I mean, I can go both ways in that. I think that is, in some degree, a bit of a novice statement. Here's why. It's easy to say that. It's easy to just say, oh, I'll just skip any trade I see and, who cares? Well, here's the real reason, Maura, is think about this. I want to walk through exactly what happened with this trade. And again, I'm not saying this I'm just saying what happens every morning. I scan... This morning was 972 daily charts. I then scan 300 daily charts. I then review everything on my charts from the day before, which is usually 100 stocks, and I go through the gap list, right? And I go through the gap list. And at the end of all that, I boil it down to about 20 stocks that I probably put on charts, and to 4 or 5 that I put onto the hot list that I want to track and trade in the next half hour. And after all that, I'm going to miss this move, and you think that's okay to do? You think that's just, oh, well, missed money, lost money, better than losing money. No, you know what? That's what you say when you start off trading and you're a loser. You say, well, missed money is better than lost money. But when you're a professional trader, these are the trades that make your day. And it is not okay to just sit back and say, now, I'm not saying you get everything. Of course you miss stuff, and of course stuff happens. But I'm saying the attitude that I can just miss a great trade is okay is not okay. Does that make sense, everybody? At least that's according to me. No, it can't, Ted. I use scans. I've used scans all my trading career, and I have some scans that run, Ted. but I actually will run a scan on like 2,000 stocks and pick the favorites of that. But I can't. You can pick out basic stuff. You can pick out trends. You can pick out some stuff, but it's too much to pick out everything I look for. And besides, it takes me 10 minutes to go through those stocks, the daily list. So would I have taken that? Well, it depends what you mean by bearish, Steve. I mean, bearish that day, you can't call the market bearish at 9:31 in the morning. I mean, you could have a bearish bias for the morning. It depends. Yeah, it's possible I could have not taken the trade if I had a bearish bias, sure. I would have been looking more exclusively at short plays, but it would have to been an incredibly bearish bias to pass up a play like this, because don't forget, a lot of times things just do their own thing. It ends up being a relative strength play. It ends up doing its own thing. So my point is that the entry, to me, this is why I say the entry is everything, because it's not just a matter of, yeah, I mean, look at the money you make, the difference. If this is your entry and stop, what do you make, 1.5? I mean, you make way more money. But it's not just that you make more money. It's that, are you in the play? See, when you have the confidence and you get a great entry, you're in the play, and guess what? When I pull back to here, do you realize that right there, I'm still up one full risk unit? Do you guys see that? Do you understand that? I'm up one full risk unit because of my entry and stop are here and here. Do you get that? Now, can you just do this on any chart you feel like? No, of course not. I just said, 1,400 stocks, here's the one I did it to. This is not like you just willy-nilly do this, but when you have the understanding and the confidence, this is the way you make money. On the daily, most of the red bar taken. True, Terry, that was part of it. I mean, that's a nice thing about the daily chart. That's why I said the daily chart not only did not conflict, intentionally using a double negative, but it actually added credence to the play. It added some clear water too, because of, like I said, negating that red bar and holding like a rock. When you negate a red bar, you should get selling. We didn't. Well, we got selling, but we got more buying to overcome it, right? No, Terry, it's not at the bottom of the bar. It's not, because that would have made this like a 10-hour trade, but it also would have made it much more susceptible to being stopped out. This is an extremely safe play. It would have been very unlikely to have stopped out. So that's HLT. So the theme of HLT was great setup, and the entry was a moment in time. All right, so now I'm going to go to Newmont, which is right out of the gates. Notice 9:31 in the morning, right out of the gates. And I want to show you the difference in Newmont. On Newmont, notice it doesn't make as much money. Newmont I'm labeling as a great setup, but not a great moment in time. Okay? No moment in time entry. Now remember when I talked about a great setup, my definition kind of was, well, you have great confidence that you have found an area that won't be violated. So here's the Newmont daily chart. All the daily chart is here for to say was there's tremendous congestion here. Also, you're not seeing it, but this is actually kind of a weekly sell setup in this stock. You don't see it here on this chart, but it's kind of a weekly sell setup. So the daily chart again did not, and this is going to be a short, so the daily chart did not conflict with taking the stock short. Now again, this is what I saw going into that morning. A stock that had gapped below this base and rallied into the middle of the base. And I know this is a huge congestion area. Now again, we all have our things. This is one of my favorite things. I call that a mattress effect. And running up into this area is going to likely get selling. So this is a favorite thing for me to be watching. And this is what it looked like at the end of that day. There's the 15-minute chart that, how it closed, and here's what it looked like at the end of the day. And what happened was this 5-minute chart. So here's the open. I'm watching this, and boom, it runs up like a banshee, like I like to say. Now, I knew when this ran up into this area. Notice how high this went. See that solid bar? I mean, all the way up there to what is the high up there? I can't read my chart either. It's 3490 or whatever. It went all the way up to here. Now I would have tried to got short, but this thing ran up and down in seconds. It wasn't really tradable. I mean, I was sitting there staring at it, and I couldn't react fast enough. So there's two types of entries that you do depending on what the play is. They're two uniquely different entries, and if you have not or do not learn entries as a separate concept from the strategy, you're still in technical analysis 101. I mean, in other words, entries are critical. In entries, I divorce entries from the strategy. You probably learn strategies, and the strategy has a certain entry to it. Very, very difficult to make money if you're using entries that are based on your strategy. Entries should be a unique thing in themselves. There's 2 entries. The one I wanted to use I couldn't use. I wasn't fast enough. So I did a second one, which is, again, why this is not what I call a great moment in time. I waited for what I call a secondary sign of weakness. So I actually waited for this to come down. And you notice this entry now is way later. This is under 34.59. So notice where this arrow is, that's where the entry is way down. So notice it went from here to here before I shorted it. So that's known as I have great confidence that that was the high of the day. But boy, I wasn't thrilled about the entry because I gave up profit, but I just couldn't get in any tighter. But I like the trade so much, it's still a good trade. Get in when it proves that it's not going to bounce back up there again. So that is that. I don't think I have anything more to add to that one. And I know you're thinking, boy, it's 2 minutes to 6, you never run over. When I do this next chart, we're done, because I just want to go through these, and I've already done all the rest of the time, I believe. And this next one is kind of the point of today's talk, and that's why I saved it for last in a sense. Before I go to the next one, I just want to remind you that a lot of these things I'm talking about, I said I had them in prior discussions. I think some of you, if you're new, you may not know. The free stuff page on my website has a lot of stuff there, including prior discussions like this. Great area to go to if you've not been there before. And you notice this is not a sales thing. I don't sit here and talk about what I do. This is to help you guys. But for those of you that are getting ready, that's a little description of the seminar program, which starts a week from Friday, the next cycle. So read that on your own. Next trade was Ajit. I'd have to pull up all the charts and show you that because I didn't feel, because it had a secondary sign of weakness and there was another pivot below 34.90, I didn't want to go up that high. I didn't need to go up that high. Plus, I'd let it pivot if I needed to. There's a whole lot of reasons. I can't go through all that right now because it gets into about a 90-minute discussion, to be honest. Number 3 was SBS, Sierra Bravo Sierra. This was entered at 10.18. Not a great setup, but this is a perfect moment in time entry. So this SBS was totally a moment in time trade. And it's what I said to the room when I did it, right? Some of you in the room here. This is a perfect moment in time entry. This is what the daily chart looked like. This had a big gap up, a big sell-off, and a big run up the next 2 days, right? Hourly chart gapped. So I'm sorry, the run up the next day. So that red bar is today, the day I traded. So here's what the hourly chart looked like. It had gapped up, sold off, and consolidated on day 1, and then day 2 it ran back up like crazy into here. Now, this was not on my hot list. This was not something I was looking at. This is not something I was staring at. This is not a top strategy to me. This is not something I would typically do, and or not stare at least, right? What happened was, it's 10:15. The things on my list, I had 2 trades going on. The things on my list, I didn't like anything else, and I went through what I call the carry list. The carry list are stocks that have gapped on prior days and could still have good moves in one direction or the other, but not that day anymore, and I put them on a back burner. So I started to go through it, and it was the second one on the list, and I pull it up. That's what the hourly chart looked like after I shorted it. This is going to be a short. This is what the 15-minute chart looked like after I shorted it. Boom, boom, boom. And here's what the 5. Now, when I pulled it up, guess what? Here's what the 5-minute chart looked like. The stock had ran down, broken the prior 15-minute, putting us in an official 15-minute downtrend. And I looked at this and said, you know what? I don't know that this is going to drop. And here's the language that I talk about. This is a perfect example. Look at this. This is what we call this gap up and total crap out. I expect this to drop. In other words, this daily chart I expect to drop more. It rallied back that hard, and then it broke this 15-minute pivot, and then went into a 5-minute downtrend. So the rally back, this little grind higher, while the market was bullish, this is the best it could do. And I pulled it up there and said, you know what? This is the exact moment that if this thing can start to move lower, it's going to trigger a bunch of selling and take the stock all the way down to here. Follow? And that's exactly what happened. You can call it a snowball effect. You can call it whatever you want. So the concept here was, okay, you know, I think this is going to drop. I get the strategy. I don't know for sure that this is going to drop here, but I know that if I get some kind of trigger that generates some selling, that the odds are really good I found that right moment that it's going to drop. And that's exactly what that was. Does that make sense? So this is what I call not a great setup. Like, I wouldn't take this chart In other words, I wouldn't take this hourly chart and present it to you at a seminar like this and say, well, here's what I do every day. I find hourly charts that look like this. I mean, this is an albatross. It's kind of a, what the heck is that all about? But you find that 5-minute downtrend and this perfect little grind back. The market's bullish, the market's going up, and this thing can't get back on its feet again. You see the selling coming in. All these topping tails. It happens to be into a declining moving average, which does help the right area a little bit, and boom. So there it is. Make sense? DTS Street Stuff page, I typed it up there, posted it in there. Take a look. By the way, I added some videos to the Street Stuff page. There are, besides the Play of the Week videos, there are some educational videos, and I added a couple to the section here on educational videos, and also put a new section here called For Newbies. In the For Newbies section, I talk about time frames. In the educational videos, I added a video that I've been promising you for a long time. You know what the video is? It's about 2 time frames to be careful of. Not that they're bad per se, but the swing and scalp. And scalping is a good time frame, but most people don't have a clue what it is. I'll give you a little foreshadowing of what that is a little bit. If you're scalping and you take 12-cent profit on something and you have 500 shares on board, you're not scalping. You're just being an idiot. No offense, unless you're training or practicing. But scalping is a very misunderstood concept, and it's a good thing to do. But most people don't have a clue. Most people are just simply taking chicken profits and calling it scalping. And swing trading, as I've explained, I think is the most difficult time frame of all to trade, and yet people are continuously told they should practice and learn on the swing time frame. It's difficult swing trading, guys. It's difficult. Yeah, well, Ted, I mean, you're right. I don't know what the definition of scalping is. I mean, I don't know if you can find one or whose it is or who cares, but it can be anything from literally playing market maker, which is what you're describing on stocks like BAC that trade 50 million shares a day, or to trading a 1-minute chart. I mean, trading a 1-minute chart I consider to be scalping, just taking normal setups and you're holding for 2, 3, 4 minutes, whatever it is. But you're doing that with large share size. Don't tell me you're buying the bid and selling the offer and you're doing it with 1,000 shares. You're just being an idiot. You know, when you're scalping, you're doing that with 10,000 shares or more or something like that. So, all right, guys. So let me know if you have any questions. You don't need to see that. That's the paid for stuff. Went through a lot of stuff. Went through it, I think, in a slow, methodical pace, best that I could. If you have any questions, you can always feel free to shoot me an email. Try and help you out. And if you're available during the day, no better place to be than at the DTS Trading Room. You can take a trial, find out about it at the website. All right? I don't know, Terry. You mean because I said I'm going to retire in three years? I don't know. I may not be able to, because I'm already doing what I like, which is just kind of really hitting that opening 90 minutes and then walking away for the most part. And I come back some days and I'll look at the screen, but I'm not sitting there. But that's what I love doing, and I also love working with people and trying to really get a small arsenal of traders that understand this. And I'm feeling really good about the number of people that are saying, hey, I'm doing well, I'm making money, I'm loving this, and I was ready to quit, I was going to give up, and I found you. I think part of it is I like showing people you can do this. There's this aura out there that, oh, this is some mythical thing people don't really do. It's doable. It's doable, and you just got to learn it. People don't want to take the time to learn it, but thanks, Terry. Yeah, appreciate that. I'm the first one to say it's tough for people. I mean, look at my website. Look at the homepage of my website. I talk people to a little bit. I talk people out of doing this. I say unless you're ready to commit to learning this, don't just step up to the plate and think you're just going to, listen to a 90-minute video and start making $1,000 a day. It's not the way it works. But it's doable, and that's what I like showing people, how you can do it.